Hello, everyone. Thanks for joining today's live video AMA. My name is Maggie. I'm the head of marketing at Crypto.com. And once again, I'm hosting for today's live stream. We recently have invited quite a few DeFi projects to chat with us. I think the one that we can't really miss out would be MakerDAO. They got 1.5 billion of crypto locked in Maker's smart contracts, which is like 3 times the total value from 3 months ago. So joining us today is Rune Christensen, the CEO of the Maker Foundation. Earlier this week, we have collected a lot of questions from our community through Twitter, and Rune and MakerDAO, they have selected 20 or so to address at today's AMA. For the questions that have been selected for this AMA, you will share a pool of 600 DAI as the prize, and the prize will be distributed directly to your Crypto.com app account within 2 weeks' time. Without further ado, I'll give my word to you, Rune. Welcome.
Thanks, Maggie. Glad to be here.
Before we deep dive the 20 or so questions, would you like to briefly introduce yourself and MakerDAO to our audience today?
Absolutely. Yeah, so I'm Rune Christensen. I'm the co-founder of MakerDAO and the CEO of the Maker Foundation. I've been in the crypto space since 2011 when I first started buying Bitcoin. And got into Ethereum really early and realized that stablecoins were so important, which is why me and a couple of others launched MakerDAO.
Great. So let's dive right in. And the first couple of questions is on the overall ecosystem of MakerDAO. So let's start. First one, why did you name your project as MakerDAO? And what is the background for the project? More specifically, if you can explain to us a little bit more of the purpose of MakerDAO for someone who is new to the crypto space?
Yeah, I mean, let me start with explaining just exactly what Maker does. So Maker delivers two extremely important and fundamental building blocks of decentralized finance, which is, first of all, a decentralized stablecoin called the DAI stablecoin. And it's pretty simple. One DAI is worth around $1, but it's still crypto. So you can use it like any other crypto, but you don't have to worry about price volatility, which enables all sorts of applications and use cases that aren't really viable if you only have access to volatile crypto. And then the other really important use case is a peer-to-peer decentralized credit market. So it is kind of like two sides of the same coin, you could say, because the way that DAI is able to stay stable yet still be decentralized is because it's backed by tokenized assets as collateral. So it really is primarily Ethereum tokens right now. There's about, I think it's like 320 million dollars worth of DAI in circulation that's backed by ETH. There's also plenty of Bitcoin that's backing DAI. There's something like 70 million DAI that's backed by Bitcoin, and a number of other assets in there. And the reason why people lock these crypto assets into the system in order to borrow DAI and create the DAI is because it allows them to access credit on the blockchain, right? So you're able to lock in your ETH, for instance, borrow DAI, and then you can go and spend that DAI without losing exposure to your ETH. Which is, especially when the project launched, it was completely revolutionary that you're now able to do this on the blockchain. Instead of having to go to a bank, go to a centralized lender, you can actually just do it through a smart contract, directly, instantly, and with no counterparty risk.
Okay, so I think you have very much so explained the design of DAI, right? And then I would like to write on it a little bit more. At the moment, you mentioned that I can stake Ether and then get a loan, get a credit line, and then get DAI. And then since DAI has become a multi-collateral stablecoin, you're also supporting other tokens as well in the project. So is there like a specific mechanism that you guys have in place to select what tokens you add on as other collaterals that you support, because you have a voting mechanism or so? And is there like any tokens in the market that would not fit the criteria of like sustaining as a decentralized stablecoin? The reason why I'm asking is because we had our guest from Paxos on Monday, the head of strategy, Walter, and he did mention that like potential of like say Paxo Gold as collateral for DAI, and then our communities was also asking like say for example like tokenized real estate assets, and other kind of tokens. So what is your view on that, and what kind of mechanism you have put in place so far?
First, let me just zoom out a little bit and explain a little bit more about the DAO and the governance of the system. So, just to reiterate, right, there's the DAI stablecoin, there is the peer-to-peer decentralized credit market, which is also called the Vault system, right? So you have DAI users that use a stablecoin that's worth $1. You have Vault users that deposit collateral into the system and borrow the DAI and then actually spend the DAI. And that's how the DAI circulation is created. And these different types of users, they interact in a two-sided market with different terms around like the risk parameters, as it's called, right? So how much you have to collateralize and what you can use as collateral, to your point. And those terms, which essentially define the security and the solvency of the system, they are controlled by a third type of user, which is the MKR holders. So MKR holders are people that hold the second token of the system, which is called Maker or MKR, which is kind of like the total opposite of DAI. So where DAI is a stable coin that's meant for regular people to use as money, that's very safe and very secure and simple, MKR is a quite advanced and volatile cryptocurrency that are used by people who want to participate in the governance of the system to ultimately set the rules of the system, and make the decisions like what you're talking about, which new collateral types should be included. For instance, there's a lot of Bitcoin used as collateral in Maker now, and that was actually added by the community taking the initiative to initially onboard Bitcoin as collateral in response to basically just like an increase in demand of DAI. So it was clear that some new collateral is needed in order to keep up with that demand. And the community then pushed for WBTC, which is a version of Bitcoin that lives on Ethereum.
Yep.
We added as collateral. And then since then, the community has actually increased the debt ceiling, so increased the amount of DAI that can be generated with WBTC quite a bit. And like I said, there's about, I believe it's more than 70 million DAI that is backed by Bitcoin at this point. And also the fun fact that the people bring up a lot is that there's a lot more Bitcoin locked in Maker than in the Lightning Network, for instance. I think, in fact, Maker is probably the decentralized application with most Bitcoin locked into it. And I mean, we're still just in the very early days of Maker governance. The community has slowly been transitioning into a more long-term framework and a more structured way for the community to make decisions on their own, which is called the Maker Improvement Proposals Framework. So the idea is you make it's basically a formalized way for anyone to make proposals to the community, and then for the community to agree on those proposals and ultimately ratify them as a part of the system's rules. And these Maker Improvement Proposals, they cover different aspects of the governance process, including collateral onboarding. And specifically, there's something called a MIP6 application, which is basically, I think you can compare it a little bit to like the ERC20 standard, for instance, which is kind of like the standard way for someone to propose a new collateral into the system. And there is right now just a huge amount of collateral being proposed to the community. And what's really cool is everybody can follow this. You can all you have to do is you go to forum.makerdao.com, and that's community forums, and that's actually where all of the governance action takes place, essentially. And you can see all of the applications happening here, and you can see the discussion between community members and the issuers that are making these applications, and even participate, because of course it's a decentralized organization. The whole point is that it's open to everyone. And we constantly see a lot of people coming with input and even expert knowledge in many cases, especially when there are new types of assets that are going a little bit into sort of the future of where DeFi is heading, right? Which is moving away from just being about Bitcoin and Ethereum, for instance, and more toward the real world, including tokenized gold. So there is a MIP6 application for Paxos Gold that I believe was actually made by the Paxos team. There's actually also another application for the Paxos stablecoin, which was which was not made by the Paxos team, but made by a community member in Maker. And that's actually something that we see quite a lot, that there's both projects themselves that come to the community to propose their own token as collateral, but it's also often that inside the Maker community, there are some active community members that just spend a bit of time doing some research and then making these collateral applications for their favorite tokens.
So I assume like your voting rights is subject to the amount of Maker tokens that you hold. So the more Maker that you hold, and the more voting rights that you have.
Yeah, it's a system that's designed to have a number of checks and balances in it. So the Maker governance process isn't as simple as whoever has the most MKR can decide anything arbitrarily, right? Because if that was the case, then you would very quickly probably see just someone buy a lot of MKR tokens and then, I don't know, shut down the system or try to steal all the collateral or something. So there's a lot of, it's essentially a funnel where there's multiple different stages of a proposal, and again, like checks and balances that ensures it's not just the tyranny of whoever has the most voting power. So for instance, an approach that's used a lot is actually the forum poll, which is one person, one vote through the forum. And it's one of the primary ways for the community to react quickly to something that's happening and then make a quick decision. For instance, when there was a big rush for people to buy DAI and generate more DAI, and then the protocol hit the debt ceiling, so the limit of how much DAI could be generated by Bitcoin. And then the community was very quick to do a forum poll to decide that the Bitcoin debt ceiling needed to be rapidly increased by 40 million, which was actually quite a drastic move. But I think that's exactly what is pretty cool about it, is that it actually worked very well, and it went smoothly. That the community on its own made this decision, started with a forum poll, and that then turns into an on-chain vote. And then finally, the on-chain vote is ultimately ratified by MKR holders. So it does require like a majority of MKR to support a proposal for it to actually go on-chain and affect the protocol's smart contracts. But again, it's kind of like it's a funnel where even any random person that has a great idea might be able to actually decide what goes up for a vote, and then put that into the voting system that is then voted on by the MKR holders.
So you highlighted three key aspects in your ecosystem. First is a decentralized stablecoin, and then a peer-to-peer credit market, and governed by another token maker. If you have to summarize, what would be the most critical elements within this ecosystem to make this ecosystem sustainable and self-sustaining in the long run?
I think the most important element is balance. So it's actually all about balancing off these different actors against each other. And in particular, the greatest challenge for maker governance is trying to balance the price of DAI. So basically it's about trying to make sure that the amount of DAI that is in circulation corresponds to the demand for DAI in the marketplace, so that the price of DAI ends up at $1. Because if you have a situation where there's too much demand and there's not enough supply, you actually end up having DAI being worth a bit more than $1. And actually we are in that situation right now. So the system has been struggling to basically scale with just the massive, incredible growth we're seeing in DeFi. I mean, it's obviously been working out quite well, right? And the system has scaled threefold, and it continues to just skyrocket in usage and new collateral getting onboarded. But I think that is the kind of challenge that is definitely something completely new. We only see in DeFi and decentralized governance, that we're dealing with these kind of scaling situations where the protocol is just becoming incredibly popular, and then it's up to the community to figure out how do we make sure that we can scale alongside the demand, but also do so in a way that doesn't introduce too much risk to the system. And in my opinion, the community has grown. It's not only is it handling this really well, and the system has been very well, growing and scaling very well. But also, what's really clear is that the governance community just keeps getting better and better, essentially, right? And really learning from doing. And that's exactly the whole point, right? Because that is the point of DeFi, and the point of blockchain, and the point of crypto is that you have, anyone can come together over the internet and do new things together, and actually even do it better than the traditional systems.
Since you already touched on, the key aspect on balancing, given that it's a completely decentralized operation model, and compared to other stable coins, which is collateralized by fiat, and then the value is very easy to maintain. The next question the community member would like to ask is exactly how do you maintain the value of DAI that is equal to $1 of US dollars, and how do you think it can be a use case among businesses for acceleration in general as a whole?
Yeah, so just to touch a little bit more on how it is possible to, in a decentralized fashion, balance a cryptocurrency so it stays stable at $1, right? So it's all about balancing demand against supply, and there's a number of different levers or options basically that is available to the governance community in order to achieve this balancing. So first of all, the most basic approach is to change the rates of the system. So basically, when you borrow DAI from the system with collateral, you have to pay what's called a stability fee, which is equivalent to, when you borrow money from the bank, you have to pay an interest rate. And then if the rate is higher, you're not going to be as happy to borrow, obviously. So if the rate goes up, you'll see less people borrowing. And when that happens, there'll be less supply of DAI in circulation, which then drives the price up. So basically, if DAI is ever below $1, that means the governance will increase the rates in the system, both on the borrowing side, but actually also on the holding side. So it's also right now this is not activated because DAI is right now above $1. But if DAI went below $1, governance would also activate what's called the DAI savings rate, which is an inbuilt mechanism to get a return on the DAI that you hold. So when there's a DAI savings rate that looks very attractive compared to regular banks, for instance, then you would see people buying DAI and just holding on to it in order to get that inbuilt DAI savings rate. And that means it's very easy for governance to basically get people to get the price of DAI to go up and get DAI to stay stable around $1. And conversely, if the price is above $1, which is the situation that it's currently facing, then the main approach is to reduce the rates in the system. Right now, the rates are basically at nothing. So there's already been this the community has already been very good at reacting quickly and setting the rates very low in the system so that it's very cheap to generate DAI, borrowing DAI with collateral from the system, so the supply can grow as much as possible and the price can go down and approach $1 as much as possible. But then the second really important approach is to just onboard new collateral to the system, right? So it's all about getting more assets into the system, getting more value locked into the system to act as sort of the backing for the stability of DAI. Because the more assets there are in the system and the more stability that exists in the system, the more DAI can be safely created and then expand the supply so that the price can get close to $1. And on the the note of how can this benefit businesses in the real world, I think what's really interesting is that this actually intersects exactly with expanding the supply of DAI and balancing the price of DAI in the market. Because when it comes to managing financial risk and when it comes to keeping an asset stable and having a portfolio of assets that sits behind it and ensures that it stays at $1 or just doesn't lose its value, then you really want to follow the principle of not putting all your eggs in one basket as much as possible, right? You don't want to, when you're trying to stabilize something, you don't really want to be tied to just one asset. And if that asset has a huge crash, then you have a big problem because that's the only thing you're relying on. Instead, if you rely on many different assets, then one of them might have a crash, but that doesn't matter because you also have 10 other assets that are not crashing, for instance. And that makes a big difference in terms of overall stability of the system. But another factor that's really important is that some assets are correlated more than others, right? So for instance, Ethereum and Bitcoin are actually pretty related. So quite often, if Ethereum is falling, you would also see Bitcoin falling. But on the other hand, there are two assets that are definitely very, very separated from each other in terms of their price movements. Is if you compare, let's say, Bitcoin and the US dollar, right? Like when Bitcoin is crashing, that doesn't really, it's very, there's not really much relationship between what's happening to the price of the US dollar. And there is actually US dollars used as collateral in the system as well in the form of the USDC centralized stablecoin. So that is already an example of maker governance balancing out the risk of cryptocurrency with the risk of USDC, which is very different. That's a really good way to hedge the risk in the system and manage the risk of the system. But so my point is that the next step is to go beyond just using, let's say, the USDC stablecoin as something to hedge the risk of crypto, but actually move into what's called real world assets, which is actually, in my opinion, this is the next big frontier of DeFi. This is actually where DeFi is going. It's not about just staying inside the crypto bubble, staying like in crypto land and only do crypto things without ever actually touching the real world. No, it's of course the complete opposite, right? DeFi is all about building new financial technology and then distributing that and applying that to the real world so that we can see benefits for businesses in the real world, for instance, right? And one of the major ways that this is already happening is that there's a lot of companies that have come to the maker community. And like I said earlier, you can actually check out the forums. So forum.makerdao.com. You can look under the category called collateral onboarding applications. And there's actually at this point, I think it's something like 6 or 8 or even more, possibly, companies that have come and made applications to use their various types of tokenized real world assets as collateral to the system. So one example is, I think it was 2 days ago, or maybe it was 3 days ago, there was a call in the community where 2 different real estate companies came and actually spoke directly to the maker community and talked about the assets that they have available, which is like different types of real estate assets in the United States, and how they have a system to tokenize them, and ultimately how that system fits into the Maker protocol and could be approved as collateral. And if that gets approved by the community, that represents a way for these companies to just access cheaper credit, because they don't have to go to a bank or go to a middleman or go to a hedge fund or something and borrow money at inflated rates, but instead they can actually get much more competitive rates from the Maker protocol, because when you borrow from Maker, you're borrowing directly from the money market, right? You're not even borrowing money in a sense. You're creating the money. It's almost like you get to be the central bank yourself, and that's obviously a much better deal for businesses. Instead of having to go through a middleman and a bank and pay fees and do paperwork, you can just go straight to actually the system that is able to create the money and then get approved by the decentralized community, based on your data and based on your credit worthiness and based on the assets that you're pledging as collateral, and then you can just access that credit directly.
It's fascinating because I have known DAI for a while right now, and then I think my association of DAI with Ether has been established. So the understanding of supporting and adding on other multifacets collateral, not just to create a supply, but also to shift the risk. I think, would you consider that design in particular as one of the reasons like why DAI as a stable coins will eventually perform better than the others?
Yeah, I mean, I definitely have very high hopes for the potential of DAI and DeFi as a whole. And I think it is exactly because the Maker protocol is able to create this direct relationship between the people who use the money and then the people who generate the money, again, with no middleman, with no paperwork, with no like superfluous regulation or like too much complexity in a black box where you don't even know what's going on, right? It's all happening on chain, and it's very direct and peer-to-peer. And it's regulated by the governance community, but ultimately that regulation happens in a completely transparent manner, right? So it's exactly clear, for instance, what fee that the Maker community charges, and in return for that fee, what they offer is essentially like a bailout in case something, a loan fails, for instance. And all of these things are just completely transparent, and the fact that they're transparent just drives them towards efficiency, because in this kind of paradigm, the goal is not to try to just squeeze as much money as possible out of your customers and hope they don't leave you and kind of like make it difficult for them to switch to another service, for instance. Instead, the whole point here is to try to create the lowest possible fees in the system, right? Create the most efficient possible system, the best possible network effect, and ultimately really go for economies of scale, try to really grow the system as much as possible, and then pass on those savings of the scale to the users of the system. So it becomes this self-fulfilling prophecy, essentially, right? Where the more people who use the system, the cheaper it gets to use, and the more safe and the more like the less risk there is. And this then results in even lower fees and even better service and just even more people using it. I think that it's going to completely change how finance works, right? This is really redesigning sort of the inside of how the financial system works from the ground up. And it also has a lot of other great benefits, including the fact that now you can actually tell what's happening in the financial system instead of just having to, listen what the bankers are promising. Anyone can go to the website diestats.com. There's also a number of other data websites, but diestats is just the one most commonly used. And diestats gives you a direct view to what is happening on the blockchain in the Maker protocol. And in real time, it enables you to see the amount of DAI in circulation and what that DAI exactly is backed by, including how much ETH and Bitcoin and USDC and all the other collateral types. And it's really like giving the bank customer the ability to audit the bank in real time from their phone anytime they want. Imagine if you could do that, in the 2008 financial crisis, right? It would probably played out a little bit differently if everyone could go in and have a look and see, okay, so what exactly was going on inside the system, right? And actually, on top of that, not only is there this radical transparency in the system, but again, there's also this community governance and ultimately, element of like aligned incentives where, again, just to like expand on this a little bit, right? So MKR holders, they set the rules of the game, right? They decide what are the risk parameters in the system, like what kind of collateral types can you use, what's the price of generating DAI and borrowing DAI from the system with collateral. And ultimately, sometimes there's going to be failures in the system, right? So sometimes there's going to be bad collateral that is used to generate DAI with, and that collateral then crashes in value. The DAI suddenly becomes unbacked. And this is actually, this is regular occurrence in finance, right? It always happens that sometimes when you're lending out money, sometimes you lose sometimes the borrower defaults, right? And in the case of Maker, it's the MKR holders who make these decisions around who are we allowing to borrow DAI, right? What are we enabling as collateral? And what's very crucial is that if they then make a mistake, like if we end up getting some bad collateral into the system, which will absolutely happen, again, it's like it's impossible to avoid in finance. But if that happens, then it is the MKR holders that have to basically take the loss. So this is again, different from how the impression we have of the traditional financial system, where the bankers and the hedge fund managers and so on, they take on all this short-term risk, and they really like to gamble with their customers' funds, because when they make short-term gains, they get a big nice fat bonus, and then when the financial collapse happens, it's the taxpayers that have to bail everything out. And in Maker, it's a bit different. In Maker, it is the MKR holders, the decision makers, that have to pay for the bailout, which really, I think, just creates a completely different, fundamental paradigm of how the system works and how much you actually have to trust whether the system is safe or run correctly, because the incentives are there and the transparency is there to follow up on it.
Great. Very detailed answer. I really appreciate that. You mentioned that to continue to grow, the scale of the ecosystem is crucial for the health of MakerDAO system. At the moment, DAI is pegged to US dollars. Is there any plan anytime soon to have DAI pegged to like euro or pounds or like other network? Is it also something that will be governed by the Maker community?
Yeah, so it's always been a very central part of the roadmap and the plan for the project to expand beyond just enabling tokenized and decentralized US dollars, but also allow things like a euro version of the system. So that would be a euro DAI and a pound DAI and maybe yen DAI and so on, yuan DAI, like all the different currencies, in fact, can all be replicated with the exact same code base. So in fact, it's not even that difficult to do this because it's the same system. It's just with different parameters. However, like I said earlier, right now the main focus is to try to onboard more collateral. So right now the problem is not so much like when it comes to balancing the system, the problem is not so much the demand for the stablecoin. The problem is the supply of the stablecoin. So the focus is really on onboarding more collateral first, because that collateral needs to be there. So there is this underlying source of stability that can then ensure that it would also be possible to deliver a euro DAI and other types of currencies with the system. And in fact, it can even go beyond that. So you can even use the same code base and the same system to not just create other currencies, but even other synthetic assets. So it would even be possible to create a gold version of DAI that tracks the price of gold, or silver, or any other asset, and maybe even assets that don't even really exist, like indexes or something, or something completely novel, like a stable coin pegged to the temperature in some place.
So it sounds like we spend the last 15 minutes like really elaborating on the potential of this system. Is there any limits to DAI, and is there any room that you can think of that DAI, the design of DAI itself, can be improved from where it is today?
I mean, I think when it comes to like the design and the potential and so on, I mean that's kind of where it's looking really great. There's so much stuff that can be done, and there's so many possibilities. And of course, the Maker protocol and the DAI stablecoin is positioned perfectly in the ecosystem, right? It really sits already as the core of DeFi. But the challenge is, how do we scale it? How do we execute on this vision? Because it's not as simple as a startup trying to build its product. This is about a decentralized community trying to run all of this, through a forum and chat rooms and so on, right? It's quite different from just regular growth of a regular company. So that is certainly a very big challenge. But like I said earlier, there's clear. I think there's a clear indication that the community is evolving and getting much more competent and able to move faster. So the big question is whether it'll be possible to keep that up and really continue to evolve and get better at governance, even when there's 1,000 collateral types in the system, right? And maybe hundreds of different assets that are being tracked by different stablecoins.
All right, so we touched on a lot on DAI. Let's shift it to the DeFi space. Like, given it's like the hottest thing, not just within the crypto space, I feel like finally the mainstream role is also picking up as well. How would you see this wave of new interest coming in on DeFi, and where do you think where the growth will be the most in the next couple months or so?
I mean, first of all, I really see this new wave of excitement around DeFi as, in a sense, just being another wave of wave of crypto, essentially. Yeah. Because I'm actually of the opinion that DeFi is not really DeFi is more of a rebranding of blockchain and rebranding of crypto than sort of a new thing, right? I mean, when I think back about 2011, when I first got into Bitcoin, a lot of the stuff that we're doing today is actually the kind of things that were discussed in the Bitcoin community back then, right? So I think it's always been about using the blockchain and using this amazing technology to just build better financial systems that can then serve the people in the real world much better. And what we're seeing with the current DeFi mania that I think is occurring right now is just that people are waking up to the fact that there's a new generation of products and new generation of things that have been built, on blockchain that are delivering, like I said, right, on the original promises of the technology. And I mean, DeFi has actually been going for quite a while, so it's been very popular and sort of it's been brewing and then sort of bubbling for a year or more at this point. Yeah. And I think really what's just happening now is it's just boiled over. It's just at sort of at the right time. There's been so much momentum already that it's just created a springboard for then a lot more attention to get into the space, and just a lot of projects launching and building on top of what's already there, which is really, in fact, I think that's a really important point to make, right? That the number one thing that really defines DeFi, and that I think that you can think of as being sort of the big things that's different between like DeFi of today and sort of blockchain of how people, like advanced blockchain, how people used to think of that a couple of years back, is that modern DeFi has really fully understood and embraced the concept of composability. So basically the ability to connect completely separate projects with each other seamlessly because of the blockchain, right? So it's all because everything is happening on Ethereum, right? So Ethereum is where all the DeFi apps are. And that means that when you want to build something new, you have just this complete, permissionless, direct access to all of the different apps out there. And that just means that the more people are building, the more opportunity there are for even more people to build extra stuff on top of it, right? And it's like everyone in the DeFi community that's building something great are actually not just building a great project for themselves, they're also building, a great new piece of the overall puzzle for others to then also interact with.
I think the observation I make, right, like in the last couple of months, is this spike on DeFi lending, right? Like you guys have been the frontier of that, but then there seems to be a lot more interest in particular that area. And when we talk about DeFi, this is not just it, right? Talking about real world applications, and it seems like we now have walked a lot away from, back in 2017, the number one question back then was like, is Bitcoin really a currency? Is it really for payment? And then now it seems to be a very different picture that we're painting here. What do you think? You also sort of like touched on that briefly, like earlier on. The very first thing that would take off, if I ask you to speculate what's going to happen soon as a real world application in the DeFi space.
I think that's actually already happening to some extent with, in particular with DAI and with other stablecoins. We're seeing people who live in countries with hyperinflation really, moving into the blockchain and moving into crypto. With Maker and DAI, it's specifically we're seeing this happening a lot in Argentina and South America. Argentina is a country that has a very high rate of inflation, something like 50 to 60% per year. And that has been the case for many years at this point. So it's a nation of people that are very familiar with using dollar bills as an alternative to the local currency in order to escape the inflation. And for them, it's just like a big advantage if they can start using dollars on their phone instead of having to use old crumbled dollar bills that break over time, right? Mm-hmm. And then the fact that DAI and DeFi is decentralized and is permissionless and doesn't have a central authority or some sort of company that controls everything. That is very appealing to people that live in countries where the banks have kind of failing and the government is kind of failing and the central bank is kind of failing, right? Like when you're used to not really being able to trust authorities, it's quite appealing to be able to use a monetary system that doesn't ask you to trust an authority. Yeah. So there's already a lot of organic usage and demand there, but I think that's it's totally just the beginning. There's going to be a lot more usage of DAI and stablecoins in South America. There's also, we know Tether obviously is being used a lot in Asia, and I think that's kind of the same thing where it's just like people just prefer using crypto instead of having to go through these more complicated old school systems. And the next step, like I was saying earlier, is I think right now people have access to sort of the money side of it, right? So people and businesses are using stable coins to save up money, to transact money. And I think the next one of the big things that will come next is when real world businesses are, for instance, able to borrow directly from the Maker protocol or from other DeFi protocols and use that as a way to get access to cheaper capital, or actually in many cases just get access to capital at all. Because as we all know, the current financial system is not, it's kind of, it's built for the incumbents. It's kind of built for the Western world, or sort of centered around the countries that already are very well off. It doesn't. So in the West, you're not really so worried about getting access to credit, or being able to fund your startup or fund your small business or something, if you're doing if you have a good product and you have a good business. But actually there's plenty of places in the world where even if you have great assets, you have a great business, you may simply not be able to access credit because the infrastructure just isn't there. And that's where blockchain and DeFi and the Maker protocol can really just leapfrog that gap, similar to how the classic example of in Africa, where the whole continent just leapfrogged the landline and just didn't do landlines at all. They just went straight to mobile phones. And I think we'll actually start seeing that in some countries in the developing world where the conditions are just right, that we will have a wave of businesses that will be able to grow and expand, because they'll just totally bypass trying to seek credit from traditional banks and instead just go straight to DeFi and get direct lines of credit from projects such as Maker.
Well, you glad that you touched on the decentralized system, how it can benefit countries that are struggling from a as less efficient centralized financial system. There are actually a couple of questions from our community on that as well. Is there anything at the moment DAI is doing to actively bring or like help accelerate the development of DeFi for markets in Africa?
So like I said earlier, right now, I think the epicenter of organic and sort of real world adoption of DAI that is by regular people and not really by crypto people, that is certainly in South America right now. So that's where we're seeing the most adoption on the ground. But there's actually also a lot of activity in Africa. It's very grassroots. So like there is, for instance, like a quite old DeFi meetup in Ghana, which the Mega Foundation has been supporting for a long time. And there's also, the foundation is working with a number of partners in South Africa, for instance, and some of the surrounding countries in the southern part of Africa, to try to use DAI as a way to improve remittances between countries, because the international transactions in Africa can be very difficult. So actually, if you're able to be in one country and buy DAI and then sell it, like send it to someone in a different country who can then sell it, that can be a massive improvement to how you otherwise have to do very expensive and difficult international transactions. So I think that is certainly something that's coming.
And different regions clearly would have different issues that they're trying to address. And the next question from the community is, what do you think for the case of ASEAN would be a good use case on DeFi for them?
Yeah, so I completely agree that it's all about, there's the different regions and different countries have different needs. And that's actually what I think is so great and so amazing about DeFi and, the Maker protocol, and just the total borderlessness and permissionlessness of blockchain, right? Because I think Southeast Asia is a great example of something. I actually often use the example that South America and Southeast Asia kind of complement each other quite well, I think, because I think in South America, the problem is access to hard currency, and it's about savings, and it's people are looking for a way to store their wealth and store their money. And in Southeast Asia, that's not so much the problem there. As far as I'm aware, they're like the currencies there are quite a bit more stable, and people trust their own currencies more. But the problem is that the financial system is like it's just not as efficient as it could be, and it's quite fragmented. Obviously, Singapore is kind of like the financial center of Southeast Asia, and that is actually also very uniquely well positioned to like really accelerate the adoption of DeFi into into like by the businesses and by the financial systems across the region. And so, for instance, a really cool example is right now there is a governance application by a Singapore-based trade finance company. So what their business is essentially extending lines of credit to companies in the region that are doing international trade. So like if they're selling a shipment of some good, they need to transport those goods to, let's say, Europe or something, or maybe to another country in Southeast Asia. While those goods are in transit, they represent, a very big capital sink, right? I mean, that's a lot of, if you have a whole ship full of, I don't know, bicycles or something, that's actually a lot of money that is on that ship, right? And then trade finance is all about, accessing the liquidity of that value that is on the ship while it is in transit. So you can have a company basically send out a shipment of, let's say, bicycles, and then get another order in, but because they just send out this big shipment, they may not have any cash on hand to fulfill the other order, even though the order is ready to go and the factory is ready to go. And that's where trade finance comes in, because trade finance means that you basically take, you have this trade, like this deal you've already made, where you sold a ship full of bicycles, but you haven't received the payment yet. And then you go to the trade finance company and you basically tell them that if you get my future income from this sale, then I need some cash up front so that I can start doing, working on another deal. And this is incredibly important for businesses, actually. Like trade finance is actually a really, really crucial service and a crucial industry. Globally, a top 3 reason why small businesses fail is actually exactly because of this issue where they have sort of an outstanding deal that they haven't been paid for yet, and then they don't have the ability to pay their employees their salaries or something, and they go under. And this might not have anything, like they might actually have a perfectly viable business. It might just be some liquidity issue that in that moment brings them under. And actually the problem is just that they don't have access to trade finance. Like they don't have a way to borrow money against their completely sound business, because the infrastructure just isn't there to do it. And so that's what this company is doing. And in order to scale up, they want to access the Maker protocol as sort of the source of funds for their operation, because that way they can just do way more of these loans, right? And that's what I think is so great, because that's what Maker is all about, right? It's all about bringing the benefits of the blockchain and bringing the benefits of DeFi to small businesses in the real world.
I think it's a great example. I mean, I myself, I'm from Hong Kong, but I lived in Thailand for 3 years. So totally understand what you are talking about. And I think like education is going to be huge in order to help accelerate for regions like ASEAN, because they don't even really speak English. So I really hope to see the next wave that actually can hit regions and markets like this. Mindful of time, want to wrap up the last question with as how you're going to see Maker Foundation in 2 years' time, given you guys have made such amazing progress and tractions in the last 2 years or so.
Yeah, this is one of my favorite things to talk about, because it's so the Maker Foundation and the Maker team has existed for quite a while, and actually the project is really one of the oldest in the space, right? So it's at this point, it's more than 5 years old at this point, and the goal from the very start has always been that the Maker protocol doesn't need any, the Maker protocol is self-sufficient and self-sustainable, right? It doesn't actually need any external support. It should be able to take care of everything it needs to operate and to function and to balance itself and to improve itself. That should come from within the community. So the foundation has always been designed around this idea that it would bootstrap the protocol and get it to what we call critical mass, which is basically the point where the protocol is able to, it has exponential growth, and it has all of the tools it needs in order to sustain exponential growth by itself. And once that's the case, then there's simply no need for the foundation anymore. So the plan is that the foundation will dissolve and it will actually disappear entirely. And instead, what will be left is a highly empowered community that has full control of the system and that has all the knowledge and all the tools and all the resources that are needed in order to build all of the various aspects of the system. And in fact, I think that this is going to be a real inflection point in the project because I mean, the traditional thinking is that having a foundation is a good thing, and it kind of it'll help drive it can help drive a project forward faster. But when it comes to a project like Maker, it's simply like it's just such an ambitious and also such an advanced project that's doing so many things at once, and it's so focused on massive scaling that having a foundation and having sort of a single entity being a big driver of the bootstrapping process is in a sense actually holding the project back, because once you have the community fully in charge, you suddenly get this ability to do a lot of things in parallel. And if the community is able to do that correctly, I think we'll see really a completely different type of growth and different kind of ability to just expand everywhere and fulfill all the use cases and all the demand that exists, entirely driven by the community of people that are able to control the system, that have the incentives to participate, and just ultimately a way better position to do it as a community because it's a decentralized protocol.
If I imagine a little bit more, it's actually really groundbreaking, right? By the day that the community can become fully self-governing. So 2 years is actually not that long. So I'm personally very looking forward to that. Thanks very much, Rune, for your insights and time today. I think you've made some really great answers. And also, thanks so much to our community for participating in this event and learn more about MakerDAO alongside with us. And once again, for questions that have been selected for this AMA, submitted by one of you, you will get a share of a prize pool of 600 DAI, and then we're gonna distribute it to your Crypto.com account in about 2 weeks' time. Any final words for us, Rune, to our Crypto.com community before we close?
Yeah, thanks so much for having me on the show and showing interest in DeFi. I think it's really exciting that so many new people want to get into this space.
Likewise. So once again, thanks very much, Rune. And in the meanwhile, please follow MakerDAO and Crypto.com official Twitter account to stay informed about any upcoming events and updates. Thanks so much. Until next time.
Thanks. Bye-bye.
Thanks.